This is Quick Input Form Tutorial 1. My name is Jeffrey Smith. Now I put together a very quick spreadsheet that I call the Quick Input Form. And this is a spreadsheet that mirrors what I was describing in the Blast from the Past video, showing that we have the subject property in the upper left corner, the contact information in the upper right corner. On the right side we have a description of the property, north, east, southwest dimensions, total dimensions, the zoning of the property, and a enumeration of the parking spaces: garage parking, covered parking, off-street parking, total parking, enumeration of the number of units on each floor, and then a property scoring. This is handled in terms of a pick list for location. Is it poor, average, or excellent? And assigns a numerical score to that selection. We do this for the 5 categories of scoring: location, condition, price, financing, and motivation. The total score, if it is 12 or higher, then this property is a prospect. It's time to make an appointment with the seller and negotiate a deal. Over on the left side we show the financing structure: asking price, asking down payment, primary financing, and secondary financing. These are called first trust deeds and second trust deeds. You plug in the investment to value ratio, and then the dollar amounts are calculated. Plug in the annual interest rate and the number of monthly payments. The payments are calculated. For the blended debt, the spreadsheet calculates the annual debt constant, the leverage to price, and the leverage to yield. There's also the gross rent multiplier, annual and monthly, and the rent per unit, annual and monthly. We then have 2 columns in the income and expense section for the annual and monthly. Gross scheduled income less vacancy factor is effective gross income. We then add in any other income, such as, let's say, laundry services, and then we have the gross operating income. Now we're in the expense section, and we include property taxes, property insurance, utilities, maintenance, lawn care, water and sewer, trash and snow removal, reserves, and miscellaneous. Property management is specified as an annual percentage of the gross operating income. Now that we've calculated the expenses, we then subtract expenses from the income to arrive at net operating income. We also calculate the capitalization rate based on the asking price, deduct the blended debt service. We calculate the debt coverage ratio, the debt coverage margin, and the cash flow margin. Net cash flow on an annual and monthly basis, and the gross return on equity, which is also called the cash on cash return. We also calculate the first year principal reduction. Adding in the net cash flow, we have the first year total return before tax. And we have a section on comments where you can add any various comments about the property that are relevant. This is a very quick input form, just to do a quick what-if guesstimate to see if this property is being offered at a reasonable rate. If the property is at an unreasonable price, you may just want to eliminate it and move on, or you could do what I recommend, is use one of the other spreadsheets to calculate an offer that does work for you and submit that offer instead. This has been Quick Input Form number 1. My name is Jeffrey Smith, and thank you for your support.